Hi, welcome to the Market Alert for Tuesday, the 6th of January 2015. First of all, I'd like to take this opportunity to wish you all the very best for 2015. And let's hope that 2015 is a very good trading year. And looking at the 5-minute chart, we can see that the market has moved down quite sharply during yesterday's session. Everybody back. It'll take a couple of days for the markets to settle down, and again, this is why you didn't see any signals for yesterday, because the markets have been so quiet, and then all of a sudden we get a fair bit of movement. So it's just going to take a moment or two just to settle in there. But we can see the market trading up yesterday to up to the highs here of 17,750. We are below the 18,000 psychological level. This happened at the end of last week, in between the Christmas and New Year period, and prices then have continued to move lower, with yesterday being the biggest drop since prices closed back below 18,000. So there's weakness in the market at the moment, and the reason for that, of course, as well, is that crude oil is also below $50 a barrel at the moment as well, for the first time since 2009, I think it is. And the low for 2008, the credit crunch March low, is $36 per barrel, and I reckon that's where the market's going. So this weakness in the background in the oil market has at last been reflected in the stock market. So we can expect to see quite a bit of weakness for the time being until the oil price finds some sort of support. So yesterday the market moving all the way down. We see prices finding support at 17,500. We do get a buy signal. We see the market attempting to move higher, but failing, we get this situation here. Let me just mark up the trade there. Coming within a couple of pips of the 20-point scalp there. And if I just draw across, you can see that with the market coming back to that 17,537 price again, before reversing and then going back down to the 17,500. Eventually the market breaking through this. And then the last half hour of trade, we see prices trading back above the 17,500, and eventually then coming back once more. So after the market sold off initially, we see the market then finding support in a 50-point range from around 5 o'clock time GMT there. In the daily chart, we've got prices moving sharply lower, which we've just seen. You see there's a fair retracement going on there. So what I'm just going to do is to draw in the Fib retracement, and I'm going to come to the low first, and I'm just going to draw this into the high. You can see we're heading back to the 62% support there. I can also use the Fib on this bar as well, this low, and if I click here up to the high, you'll see that we're at 76% there already for this market. So 76.62. Let me just draw that back in again. Managed to remove both. Let me just remove the one line. So there you can see we're at the 76.62 of those two bars, and this is where the market is likely to find some support. If not, and it comes through, this area is crucial here at 17,292. If the market does find support here, then what we'll do is draw in some fibs to the upside, where we can expect to see some sort of resistance should prices turn around and move higher. But at the moment, this market is weak, and I wouldn't be surprised if we don't see a retest of the lows in this market at the 17,035 area there. And on the news front, we've got holiday in Italy, but for the US at 3 p.m. we've got factory orders and also ISM non-manufacturing PMI. That's out at 3 p.m. also. So again, just a matter of getting back into the groove and normal routine, which we will be by the end of this week. In the implied volatility, this increasing, which you'd expect it to do, as we've seen the drop in the background there. So again, it's just going to take a moment for this pattern to settle down and reveal what it's actually doing, because of the last 2 weeks where the markets have been fairly quiet. Okay, that's it for today. All things being equal, see you in tomorrow's market alert. As ever, thank you for your support, very much appreciated. And as ever, thanks for watching. See you in the next one.